You bought a rental property in your personal name, or maybe you're now an accidental landlord because you couldn't sell your residence and you had to turn it into a rental. Well, let me ask you this. What actually happens if you don't put that property into a limited liability company? Well, today I'm going to show you the exact risk you're carrying, what insurance does and does not cover, and a simple plan so you're protected against lawsuits. All right, let's get started. Okay, so here's the thing that I want you to understand. Insurance, okay, this always comes up. Insurance, what is its purpose? It's to pay claims. All right. Now, what about a limited liability company? We see an LLC, its main job is to separate risk. Okay. These are two different concepts. And people who own real estate do not understand this many times. And they think, well, I've got insurance, I'm protected. You see, insurance handles how much someone gets paid in the event there's a claim that's made against you because of your property. An LLC controls who can be reached in that lawsuit, and your records prove it. So if you skip the LLC and you're changing who is exposed when something goes wrong, that is not what we want to do. So what I want to show you then is what these differences mean when it comes to actually being involved in a lawsuit and what happens when you skip the LLC. So if you set up your plan and you decide, I don't want to use a limited liability company, then what you face, number one, is what we call inside out exposure. Now, what does that mean, inside out exposure? Okay, so let's take this individual here. This is an investor. Let's say that this couple, they had a rental property that they just bought in their own name. They're keeping in their own name because someone told them that, hey, just get some insurance, create a bigger policy, and you're covered. We see when you're in this position and you own this property in your individual name, and something happens on the property, okay, so that's where the lawsuit originates. It originates right here with the property. They will sue, that is, the person that's injured is going to sue the property owners. Now, what do I mean by injury? Well, it could be anything. Maybe they find toxic mold on your property, and so they bring a claim against you. Maybe somebody slips and falls on the property and they're suing you. Maybe the tenant has a dog and it bites somebody, and now you're being sued. Listen, there are a myriad of ways in which you can be sued. You can even be sued for not even renting property to someone. So the facts of the matter is this, is that when this occurs, all right, they're suing you. So not only is this property at risk, but also your W-2 income. If you're working for an employer right now, if you're employed, they can go after and garnish your wages. Your savings account, okay, is also going to be at risk. Okay, they can garnish your savings account, your brokerage account, your other rentals. All of this is on the table, including the insurance. So that's a major problem you have if you're skipping the LLC. Okay, now the second issue you have, what I'm gonna put down here, number two, is going to be cross-contamination, okay? So what do I mean by cross-contamination? Well, what I'm referring to is that if you have this property right here, and you have another property over here, this could be your personal residence. This could be another rental property. So you own the rental here and you own this property here. Well, if a lawsuit develops on your rental property, then any claim that's brought against you, well, they could file a lien on your second property trying to recover their assets. And they do this by form of obtaining a judgment against you. So this is a real concern you have when you own real estate in your own name as a landlord, that you're exposing yourself to this type of claim for your other property. All right, so what is the third issue you faced? Okay, this is what we call outside exposure or outside in exposure. And what that means is that I've been talking about your properties creating liability for you. Now, what a lot of times people do not address or do not think about when they are considering asset protection and liability with their properties is the fact that you create liability for your assets. So rather than somebody injuring themselves on this rental property, think about this. You're involved in a car accident and now you're being sued, or maybe you have a child that was involved in a car accident and they're suing their child, and then you're named personally as well because you're the parent and you're the registered owner of the vehicle. So what can happen there is if a judgment's entered against you, then that judgment again could be used to place a lien on this property. So that is a concern, the outside in, you creating danger for your assets. All right, number four, the other problem you have here is lower settlement leverage, okay? So what do I mean by lower settlement leverage? Okay, so when it comes to a lawsuit and someone's coming after you, say you have a tenant and they're looking to go after you, what we like to do is get that plaintiff to say, hey, I have this big policy over here with $600,000 in policy limits. There's the cash for you. Take the cash, go away. This property here doesn't have a ton of equity. Why go through the process of going after it? All right. The problem with trying to argue this to get a tenant to go after just your policy limits or get the attorney to go after it is the fact that they know you have more assets. They do an asset search. They see you have another property down here. They find out you have a bank account and an investment account over here with $300,000 in it. And now all of a sudden, settling for policy limits, hey, that's small potatoes. You have more that I can demand. And so when all you're doing, when you hold assets in your own name, and yes, you have the insurance, you're not limiting or giving yourself leverage to try and get them to settle just for your policy limits because everything is on the table for them. All right, now the fifth issue you have by not using a limited liability company is loss of privacy, okay? Of privacy, and say you have a tenant that just wants to harass you. Okay, this is a real problem as well. So we'll call this harassment risk. Okay, so when I own this property in my own name, let's say that you're using a property manager, and so the tenant's only dealing with this professional property manager. They don't necessarily know you're the owner. But if you're listed on title to that property and they're able to search you and then find your home address because you have the tax statements for this house going to your home address, well, you could have some random tenant showing up on your house one day complaining about the property they're renting from you. And so the question is, do you really want individuals with whom you're conducting business to know where you live? And that's a real problem when you own property in your own name, that it just leaves all this information out there on the public record. And the last thing I would leave with this here, which I think is an important aspect that we need to focus on, is estate planning. Okay, estate and probate risk. Okay, and so what do I mean by that? Well, when you keep properties in your own name, something were to happen to you and you pass away, then this asset, if you don't have a living trust and it's just in your own name, it's going to have to go through probate. And eventually it's going to go to your beneficiaries. And if these beneficiaries themselves are involved in a lawsuit at that point in time, well, you could actually lose that property because they won't receive it through your estate plan. So another thing there is if they're going through a divorce, maybe that becomes an asset of the divorce. And so what I prefer to do is not have real estate transferred directly to your beneficiary. What we want to do is protect it so there's never a public transfer, meaning you never see this deed or this property deeded to your beneficiaries because you can hide it when you don't keep it in your own name. So no LLC means this: more pockets to reach for your creditors. All right. So what we want to do is create an LLC so there's fewer doors for them to knock on. Okay. So what do we need to do then? What we need to do is this right here. We need to create a limited liability company and we need to get the property put into there. But I want to first address some of the myths that I see out there on the internet all the time. Number one, LLCs save taxes. Listen, this type of structuring is not going to save you on taxes by setting up a limited liability company because it's all flow through. All right. The other thing you're going to hear about sometimes when you hear about LLCs, oh, they don't protect you if they're a single member LLC. That is complete garbage. Certain states, yes, that's true, but you can structure around that. Another myth that's out there is that just load up on an umbrella policy and now you're completely protected. Listen, umbrellas are fine, but all that's doing is adding dollars to your coverage and not walls around your assets. So again, you go past those policy limits, then they're going after you. Now, LLCs are magic, even if they're sloppy. I mean, if you just file an LLC and put your title into it, you're good to go. That's not true. What you want to make sure you're doing with LLCs is you're adequately separating and segregating out your assets. You're not commingling, and you have all the proper paperwork, great operating agreements in effect to make sure you're completely protected. So how do we make this work? Okay, what you want to do, as I showed you here, is you want to make sure you get your property into that limited liability company. And now by doing this, we're going to solve those 6 issues that I brought up. By having the property inside of the LLC, know this: just like what they say is what happens in Vegas stays in Vegas, what happens in the LLC stays in the limited liability company. So all that liability claim stays there. So what could someone get if they sued the LLC? They could get the equity in your property. They'll get the insurance Okay, on the property, the policy limits, what they won't get, personal residence, your savings account, your brokerage account, those assets that we talked about earlier, they're going to be protected. Hey, what happens if you have another rental property? Well, put that other rental property in a separate LLC, segregate it out so you don't have that cross contamination, right? If they sue this, they're not going after this property here. By setting up these structures, what you're also doing is protecting against that outside in that we discussed earlier. Because if somebody sued you, they're not going to be able to break your LLC if it's done properly and get after the assets held inside of there, because you'll have charging order protections. And hey, you're thinking about those tenants showing up at your house. You can set up these structures with complete anonymity, so no one knows that you own these limited liability companies. It's called an entity stack. It's something we do here at Andersen all the time for our clients to make sure that their tenants don't know that they have these things in place. Talking about estate planning, this is the perfect strategy for your estate plan if you have rental real estate, because when you pass away, your beneficiaries over here, they're not going to inherit the house. What they're going to do is inherit the LLC. So they get all the same protections. The privacy that you enjoyed while you're alive will then pass on to them, and they continue on with this structure. So, those creditors I talked about in my example, if someone's being sued or going through a divorce, they won't be able to affect or impact the inheritance that you're leaving behind with your children. Now, this doesn't mean to say that by setting up this structure, you can do away with insurance. You still need insurance, okay? So make sure you know that you got the insurance in place. But more importantly, here's the thing. When you're setting up this structure, make sure you draft a great operating agreement, because this plan that I've just shown here, they've been drawn out for you. It's only as strong as your actual documents themselves and how you run them. So you want to make sure you're documenting things properly with a strong operating agreement, setting up a bank account in the entities and running the appropriate expenses through those accounts, because you never know where something's going to go off the rails and a lawsuit's going to come. Maybe it has to be with a contractor that you brought in to do some rehab work on one of these properties when it's a turn. And it turns out that the contractor didn't do what they said they were going to do, but they're still demanding their money and they're coming after you and they're suing you. Do you want that lawsuit to come after you personally? Do you want them to get a judgment against you? I think not. That's why we got to have that LLC in place. So this is how I would set it up for the landlords. Make sure you're using limited liability companies. One door, one LLC is the way to go. Throw the insurance on there, maybe the umbrella insurance. Well, multiple doors, multiple LLCs, better protection there. And make sure you're keeping it private when you set it up. The LLC, okay, is your life backstop. Okay, we want to build walls. That's what you get when you do this. Okay, the insurance should just add in dollars to cover the claims that are brought. LLCs are backing you up and protecting you. Hey, if you want to learn more about this type of planning, I'd like to invite you to our free one-day tax and asset protection workshop. We run these things on Saturdays, and it's completely free, as I said, to register. All you got to do is go to the show notes right down below. There's a link there. Just click on that link, get registered, and you'll learn. We're going to take you on a deep dive into how to protect your real estate, and more importantly, how to reap massive tax savings from owning investment real estate. I hope to see you on our next event.